Taxman's taken all my dough and left me in
Oh, that's so true, so true.
Welcome back to
Blame the messenger, right, Nate?
There you go. Yes.
You are
Welcome.
not Uncle Sam.
Nate,
No,
no.
he's going to give us good tips.
I
for
know.
what
Well,
to
the song was the
prepare
text
for.
man
Hopefully.
takes it all. So.
Yeah.
Well, welcome back to the Stockwell Eldritch Show. And we have many experts in the room right now, so that's great. So we're going to be talking about taxes next and what you can do and helpful tips for you as it comes to the season that we all love. And then hopefully maybe I can learn something from this too, because I generally wait till the end of the year and
Are you
then
doing your taxes like on New Year's Eve or something? Or
and then figure out where it's at, and then I make a
the annual giving?
payment, and then clear it up by April and make sure it's adequate and accurate, and then you it's kind of disheartening as a self-employed when you don't actually take them out, because you think you can have that money and use that money. It's kind of like yep, gotcha. But
Why we tell
Yeah.
people to escrow for their taxes and insurance?
yeah, because it's never yours,
Yeah.
and it's
Right.
better to have it.
I'm not gonna let the
that's-
bank hold on to my money. Like, yeah, and then it comes tax time, and you're like, oh crap.
Which is a way better idea, because once you see it and it's in your account, it's easier to use it or invest it. I justify it because I think, well, I'm going to invest it into something, and then therefore it's justifiable. But I'm borrowing money then essentially from paying my taxes. Which anyway, I pay my taxes. I do that. I'm not like Donald Trump. I pay my taxes,
Yeah, that's okay.
and I pay my fair share, if you will, so Bernie can be happy and everybody else can be happy with the fair
So,
share.
well, I guess you could probably talk about that, because I mean, obviously, I'm a W-2 employee, but so self-employment. I mean, or are you just talking you have to pay taxes quarterly, or
You should be. Well, Nate Nelson, Mesley and Kramer, tell us, all the stuff you want to talk about, but introduce yourself and what you do, and sounds like taxes are up your alley as well.
Thank you, Jason, for having me on. Enjoy being here. I'm a tax attorney and estate planning attorney and business transactional attorney at the law firm of Mesley Kramer. Basically, who I work for are entrepreneurial, self-employed individuals that may employ several persons to several hundreds of persons. And kind of a neat segue of the uptick, I guess, that you're still showing homes and whatnot in this fourth quarter. Maybe that's a little bit unique to you guys the way you're describing it, but in the business climate, the fourth quarter is a whole bunch of pressure to get deals done now and get it in. People are incentivized personally through bonus structures, you can imagine, and corporations also want something on or off their balance sheets for the same reasons, if you will.
Yeah.
But back to the common denominator of just us and what can we do as individuals to lower taxes. If you're in a position where you're holding an investment property, or if you're a business person that is entering into a transaction into this fourth quarter, you want the sale to go on. The taxes are going to be there, but what you can control, perhaps, is the timing. There's an inherent tension between the departments of revenue, whether that's Minnesota Department of Revenue or the IRS, and a taxpayer. The revenue departments want the money now. We want to give it to them later.
Mm-hmm.
So
Much later.
or never, right? But no, we can't do that, right?
I like never.
And sometimes if you die with it, you can avoid it. But aside from all that,
Well, that's great. Then no, I was kidding.
if you're looking at for many people that sell a residential home, the exclusions are so high that they're going to be taxed on it if they qualify. If they've lived in the home for 2 of the last 5 years, and the gain, we probably haven't seen into the hundreds of thousands of dollars that would trigger a tax for a single or a married person. However, if you're in a business owner trying to sell your business, or if you have investment properties that are ready to go, if you sell those on January 1 versus December of 2016, there's a big difference of when the taxes are due. So if you make a sale in the fourth quarter, December 31st, you're going to pay your taxes April 15th of 2017. Whereas if you push that sale into January 1, January 2, January 3, you're not going to have to pay until April 15th of 2018. So you have 15 more months with your money right there. Again, can't make the taxes go away, but if you're in a position where you can control the timing a little bit, you're going to win that little war between the revenue department who wants it now, and you get to keep it for 15 months instead of 3. and you can just imagine all the scenarios where that could play out, whether it's a business or the sale of a investment property or even a stock. You might be in your own portfolio. You want to sell some stock to buy more real estate. If you can hang on till January, you'll have more principal to work with longer.
That's a good tip. I didn't know.
Yeah, it
Yeah,
is.
that's great advice. Absolutely.
Individually, just a couple quick things that you can do. Remember to the extent that you're able to max out your 401k, the $18,000 allotment there is something that people can take their entire December salaries, especially if you're in a position where you know you have a sale coming in, or if you're expecting a big bonus. Maybe you just defer as much as your custodian of your plan will allow of your salary, just to eat ramen noodles for a week. But
So 18,000 is the max. That's great now.
Get
That's
to
up.
that 18,000.
So say that again in your 401k. So right now, like I have a certain percentage. You're suggesting that for like the next month, my next 2 paychecks, just the max that they can take out and put into my 401k, I should do that?
That's the technique
you're
that
able
we
to,
see.
right? Yeah.
Yep, as long as
If I can afford it. If I find a
you can
sugar
afford
daddy
it.
can
There you go.
if I can find a Santa Claus to take care of me for 2 months, I'll eat ramen noodles.
But that is the mindset right there. It's
Okay.
like you lived with it all year. You'll never, in theory, regret contributing it to it, even though it might be just eat it. Go to some friend's house at Thanksgiving and take
Okay.
a doggy bag to come home.
So, what if someone is self-employed? Or do you recommend that they do that in their?
Again, anything that they can do to reduce their overall income with adjustments to their taxable income, now's the time to be focusing on that. And as we start off, not adding to it. Other things for a self-employed person, there's a lot of limitations as to what is deductible against your adjusted gross income, like 2%. You have to get, increase past the 2% floor of your adjusted gross income. So we say bundle as many of your business expenses as you can that are not otherwise deductible. So if someone that's moonlighting and a W-2 employee and what have you, for instance, if you have $100,000 of income and you pay your legal fees and you pay your tax preparing fees and you look at some of your other business deductions that wouldn't otherwise be directly deductible, if you pay $3,000 to your attorney just saying, and you make $100,000, you'll get a $1,000 deduction. Everything over $2,000 will be subject to a deduction. So those are the business travel, business expenses, the attorney, the tax advice bills that you get them in now, get them paid now, and that'll be a deduction for your 2016 taxes due in 2017. For those of you that are going to make charitable contributions, as long as it doesn't involve a car, up to $500 before you need to attach the form the IRS requires to substantiate the charitable deduction, but get those in before December 31. If it involves a car, you'll need to, and you're claiming more than $250 for the car, the charitable recipient will have to sign an acknowledgement. But those are easy steps, all available online at the irs.gov to get those forms. But the key is to get those expenses in now, or those deductions in now. Finally, for the sugar daddy or grandma, grandpa, it's year-end gifting time. And
Well, there you go, Stephanie.
All right.
Yeah.
Okay, Stephanie, STEPHAVEL, 612-940-7335 for all charitable contributions.
Uncles and aunts count too. This could be really anyone
Oh, I have a
that we're
couple
looking for.
uncles, sure.
But the rule is we can give $14,000 away each year to anyone, and we don't lose any of our exemption against gift tax by making the gift the donor, and the donee doesn't include any of that gift in income. It's always good to be the donee. Donees don't include gift items in income, but the donor could be penalized by making it what's called a taxable gift.
And what was the maximum amount
Okay,
on that?
so
14.
you
14,000.
say,
Yep.
okay, so let's say I say, hey, I just want to give a gift
To me,
Right.
to John.
The millennial.
14
You
grand.
just give 14 grand. It's a deduction on my end as a business.
No. We're not talking deductions now. I'm just saying this is use it or lose it. So this is for the persons that are in the position where they can make gifts. Maybe they're trying to avoid estate taxes. Maybe they're...
Oh, got it. So it's not something it doesn't benefit the person who gives the gift necessarily on their deductions, but it could if they're trying to make sure that they can give something for estate planning purposes.
Right,
Mainly,
and
right?
with the election coming up, we don't know what's going to happen to estate tax exemptions.
Well, we do know
anyway.
if Hillary gets elected, it's going to go up like crazy. She's going to hammer the top wealthy people and go where the money is. She's openly stated that, right? So
Right,
her
so-
goal is
so-
to hit the business owners hard in the top tier, and then
She's talking about
make them
raising
pay,
rates
right? Yeah.
and lowering exemptions to the point where, in the simplest form, it doesn't go dollar for dollar this way. But if you gave away $100,000 to somebody during your lifetime, and right now we can die and give away $5,450,000, that $100,000 gift would let you only give away $5,350,000. For many people, that's not a problem. However, you're right. With the election, it could be that the rates go back down to 3.5 million, and now we're getting into that area where you count 401ks, life insurance, and
All that
lots of
stuff,
people can
yeah.
have there. And then could these gifts come back to haunt? And the idea is, if you can give away 14,000 in 1 year to a person, and there's no damage to the
Yeah.
exemption amount of the donor. To that extent, if you're married, you can give away 28,000.
Oh, well, that's good to know. And on the flip side, too, Trump is going to lower, or his proposal is to lower taxes. So
Or raise the exemptions.
Yeah, so then the rich people stay even richer, and then they can suppress everybody else in society. So we've got a great.
Either way,
we've got
it's-
great options on
went
both
dark
sides
there.
for everybody.
Went dark.
Although, if you contribute to the Clinton Foundation, I heard it will be always tax deductible, and there might be some extra benefits, right? So anyway, we'll be back with more of the Stockwell Eldridge Show.
Oh,
I'm
boy.
Jason Stockwell. Remax results.
Dawn Eldridge Remax results.
Stay tuned.
Withholding tax. There goes the shirt right off my back.